What's up, everyone? Today I wanted to go over how to get high risk reward setups. It's really simple when you think about it. It's kind of obvious, but I'm just gonna say it anyway. If you're trying to buy from discount. If you're trying to sell from premium, right? Buy low, sell high, right? What's the logic behind this? Well, the logic is that price has more room to run once it reacts well off these discount and premium levels to be able to reach those high risk to reward targets. And institutions really are active in these zones too, so you're really trading with the sharks at that point. So yeah, we'll go over some high risk reward setups and why that logic makes sense in terms of buying from discount, selling from premium. That could be a smaller time frame all the way to a higher time frame. So yeah, let's go right into it. So as you can see here, I'll be going over a GU setup, a EJ setup for January, and then a USHF setup from NFP February. You might have seen this before, but let's go over it. So this setup currently running about 3840R. What's the logic here? So we're on an hourly 4-hour time frame, and at this point, let's see right here. I'm gonna just leave this up because you'll see where the entry came. Price is technically equilibrium discount right here in terms of this leg. This is the last major buy, sell to buy we see, i.e. demand. So price comes into demand, right? Sweeps a lot of liquidity. Price ranging for a while, sweeps liquidity, taps into an order block, if you want to look at it that way, and starts showing signs of bullishness. We see price break some order flow here, comes back to mitigate, and then same kind of situation. We're buying in the higher time frame under equilibrium, right? And then this is, and also another way to get higher risk rewards. You have your higher time frames going back to your lower time frames, and then once you get to your lower time frames in your POIs, you're looking for a Wyckoff schematic. And the way I trade, this setup presented a 7.4 pip stop, and price reacting off demand. This is a creation of new demand. Fundamentally, price goes up 38R. So the key here, buying at discount, waiting for a schematic in your POI, and then just playing off that. And the main other key is waiting for that lower time frame to confirm itself too. See, look at this. We have a big range accumulation happening here, and then buyers really just took control. And then similar on EJ, sell from premium, right? So if we're just looking at this leg from here down to here, price is valid as long as it doesn't break this high. So price comes in into a premium. Just remember, we're in a premium leg here. If we want to mark out the premium extreme here, and then price comes in, gives another smaller distribution, and then from there allows us to go in for the short based off my strategy, right? This is not a strategy video, but just idea, right? Selling from premium because it has more room to run, right? If I'm selling from here, not as much room to run, 70 pips versus over 100. And then as you see, partial is going all the way to right there, about a 30R, right? Same idea. Price comes into premium, wait for your lower time frame to confirm itself, and then boom. And then we have a USHF over here. So this is what price looked at before it confirmed itself, right? Higher time frame, price reacting off some demand here, even, you know, just taps in there, and then, and this is where news comes in, right? We see massive accumulation. You should look up these Wyckoff plays, you know, secondary test, you know, after this automatic reaction, and then we have a potential spring here, break of order flow. Price comes into the ultimate extreme, ultimate discount of this leg, right? This leg. Price is valid as long as it doesn't break this low right here, right? So price comes in to super discount, and then look what happens in the lower time frame again. This was the day of NFP, so institutions were active here. Like I said in the beginning of the video, when institutions are active, you're trading with the sharks. So, you know, you could, you know, be eating off that too. Excuse me. So price comes in at the lower time frame. Just remember, we're still in a discounted leg in the higher time frame, super discounted leg, right? Price comes in, not entry here. This is just still printing out the schematic, but when price breaks this high, as you can see, tap in right there, and then boom. So limits actually set after it breaks this high, so right there. And then see, look, this is so valid. And then, you know, from there, this ran for a lot. Let's see, 157R. So yeah, same concept, right? Buying from discount. That was a super discounted leg right here, if you want to look at it that way. From this leg, it nearly retraces 100%, right? Gives a smaller schematic. If I'm an institution, I'm going to be doing that, right? I'm going to be taking price as low as I can, filling orders at the last second, and then boom. And then if you can see this, that's what I've been training my eye for like a while now. You could really just be eating with the sharks. Yeah, that's mainly it. Just like a simple concept, might be obvious to some, but just thought I'd share for more of the beginners too. You know, if you want more room to run, sell from premium, sell at a high price, and then buy at a low price, right? That's all. Please like, subscribe if you want to keep up with content like this. Comment on your thoughts below. Catch you in the next one. Thanks.